All right, so let's jump right into it. Omni Organics Limited's Q3 FY25 financials. We've got
Okay.
we've got their press release and the investor presentation.
Mhm.
And I've got to say, some of these numbers are truly eye-opening.
Yeah.
They're reporting revenue growth of 65.2% year over year.
Wow.
That's
That's huge.
that's massive. It really makes you wonder what is driving this kind of performance.
Well, it seems like they're firing on all cylinders.
Yeah,
Omni Organics is a leading manufacturer of advanced pharmaceutical intermediates
right.
and specialty chemicals, basically the essential building blocks for medicines and high-tech materials.
Yeah.
And the demand for these products is just skyrocketing. What's particularly interesting is their strategic focus
Yeah.
on contract development and manufacturing.
Okay, their CDMO business.
Their CDMO business, yeah.
Okay, so for those of us who don't speak fluent, Wall Street, can you break down what that means and why it's so significant?
Absolutely. Think of it this way. Pharmaceutical companies are constantly racing to develop new drugs.
Right.
They need partners with the expertise to not only create these complex chemical components,
Yeah.
but also to scale up production.
Okay.
That's where Ami Organics' CDMO business comes in. They're becoming the go-to partner
Right,
for
right.
these innovators.
So they're not just selling chemicals, they're selling expertise and manufacturing capabilities.
Exactly.
That's a smart move, especially with the pharmaceutical industry constantly evolving.
Exactly. And if you look closely at their financials,
Yeah.
the CDMO segment is a major growth engine.
Okay.
Their pipeline of CDMO projects is overflowing with several initiatives nearing commercialization by FY26.
That's got to be a huge confidence booster for investors.
Mm.
Seeing that kind of forward momentum, it's not just a one-quarter wonder, it's a sustained strategy. Speaking of investors, their EBITDA margin saw a significant jump, hitting 25% in Q3.
Right.
Could you unpack that for us? What does that tell us about the company's financial health?
Well, the expanding EBITDA margin is a really positive sign. It means they're not just growing revenue, but they're also becoming more profitable.
Right.
They're managing costs effectively and converting a larger chunk of their sales into earnings.
I see.
That kind of efficiency is something investors love to see.
And they've even upped their FY25 growth guidance from 30% to 35%.
Wow.
That's a pretty bold move.
Yeah.
Are they just riding a wave of optimism, or is there something more substantial behind this revised forecast?
It's unlikely they'd make such a move without solid justification.
Yeah.
It suggests they're seeing very strong demand signals, particularly in their CDMO business.
Right.
They're probably also benefiting from their strategic expansion into specialty chemicals,
Okay.
specifically in the areas of semiconductors and battery technology.
Now that you mention it, the investor presentation highlights their breakthrough in the battery space.
Mm-hmm.
They're the first company in India to manufacture electrolyte additives, key components in batteries.
Right.
That's got to be a game changer for them, right?
Absolutely. It positions them perfectly
Yeah.
to capitalize on the booming electric vehicle and renewable energy markets.
Right.
The demand for these advanced battery components is only going to increase, and Ami Organics is right there at the forefront.
So they're not just playing in one high-growth market, they're strategically positioned in several. That kind of diversification is pretty impressive. But their roots are in advanced pharmaceutical intermediates, which still make up the lion's share of their revenue.
Right.
What's driving their success in that segment?
Well, they've built a reputation for exceptional quality and reliability.
Okay.
They've also mastered the art of developing multiple synthesis routes for a single intermediate, giving them flexibility and a competitive edge.
Okay.
This allows them to offer products from various stages of the chemical process, from
Okay.
N1 to N12.
Okay, I have to admit the N1 to N12 thing went a bit over my head.
Sure.
Could you explain that in a way that even I can understand?
Sure, think of it like a recipe with multiple steps. Ami Organics can provide the ingredients at various stages of that recipe.
Okay.
This flexibility is incredibly valuable to their customers,
Yeah.
as it allows them to tailor their sourcing strategy to their specific needs.
So it's not just about offering a wide range of products, it's about providing solutions tailored to each customer.
Yeah,
That's pretty savvy.
exactly. And their customer base is incredibly diverse. The investor presentation mentions that they have over 500 customer locations in 55 countries.
Wow, that's some serious global reach.
Yeah.
It's clear they're not just a local player, they've got a global footprint.
Mm-hmm.
But with all this talk of rapid growth and global expansion, I can't help but wonder, are there any potential risks or challenges on the horizon?
That's a great question, and it's one investors should always consider.
Yeah.
One potential challenge is the inherent cyclicality of the pharmaceutical industry.
Right.
Drug development can be unpredictable, and setbacks in clinical trials
Yeah.
can impact demand for certain intermediates.
So even with a strong CDMO pipeline, there's no guarantee of smooth sailing.
Exactly. There's always an element of risk.
Okay.
Another challenge they face is competition.
Right.
The market for advanced pharmaceutical intermediates is getting increasingly crowded with both domestic and international players vying for market share.
So they can't afford to rest on their laurels.
No.
They need to keep innovating and staying ahead of the curve to maintain their competitive advantage.
Absolutely.
But from what we're seeing in their financials and their strategic moves,
Right.
they seem to be well aware of these challenges and are taking proactive steps to address them.
Yeah.
For example, they're investing heavily in research and development to expand their product portfolio and stay at the forefront of innovation.
Exactly.
And that investment in R&D seems to be paying off.
Yeah.
They've invoiced for over 570 products in the last 5 years.
Wow.
That's a testament to their commitment to constant innovation.
It certainly is. And they're not just focused on developing new products. They're also constantly optimizing their manufacturing processes to improve efficiency and reduce costs.
This leads us to another point highlighted in the investor presentation, their commitment to sustainability. They've implemented a zero liquid discharge system at their Sachin facility, and they're developing a green belt at their Chagadia facility.
Right.
Is this just good PR, or is there a real business case for these sustainability initiatives?
Well, I think it's a combination of both.
Okay.
Consumers and investors are increasingly demanding that companies operate in an environmentally responsible way. So there's definitely a PR element to it, but there's also a strong business case. By reducing their environmental impact, they can lower their operating costs and improve their brand image, which can attract new customers and investors.
So it's a win-win.
Exactly.
They're doing good for the planet and good for their bottom line.
Exactly.
Speaking of doing good, their commitment to sustainability goes beyond their own operation.
Right.
They're actively working to reduce their carbon footprint throughout their supply chain.
That's right. They're partnering with their suppliers to implement sustainable practices and reduce waste. It's a holistic approach to sustainability, which is becoming increasingly important in today's business world.
It seems like they've really thought this through. They're not just jumping on the sustainability bandwagon. They're integrating it into their core business strategy.
Exactly. And I think that's a key takeaway from this deep dive. Almi Organics is not just a company focused on short-term profits. They're taking a long-term view, investing in innovation, sustainability, and building a business that can thrive for years to come.
All right, so we've covered a lot of ground here, from their impressive financial performance to their strategic moves and their commitment to sustainability. But before we move on, I want to circle back to something you mentioned earlier about the potential risks they face.
Sure.
You talked about competition and the cyclicality of the pharmaceutical industry. Are there any other challenges we should be aware of?
Well, one thing that stands out to me is their reliance on the Indian market. While they have a growing international presence, a significant portion of their revenue still comes from India.
That makes sense. India is a major pharmaceutical hub, so it's natural that they would have a strong presence there. But what are the implications of that reliance?
Well, it means their fortunes are closely tied to the health of the Indian economy. Any slowdown in India could impact their growth. They're also exposed to regulatory changes in India, which can be unpredictable at times.
So while India offers them a huge opportunity, it also presents certain risks.
Right.
It's a classic case of high risk, high reward.
Exactly. And it's something investors need to keep in mind when evaluating the company.
That's a really important point.
Yeah.
We often focus on the positive aspects of a company's performance, but it's crucial to consider the potential downsides as well.
Absolutely.
So they've got this incredible growth story, but it's not without its challenges.
Right.
That raises an interesting question. How are they mitigating these risks? What steps are they taking to ensure they can navigate these potential headwinds?
That's a great question, and one we'll explore in more detail as we delve deeper into their operations and strategic initiatives.
Okay.
Let's start by taking a closer look at their business segment breakdown.
Okay, sounds good. Let's unpack how these different segments contribute to their overall performance and how they're positioning themselves for future growth.
Looking at their business segments, Advanced Pharmaceutical Intermediates is taking the lead. This segment brought in a significant $5,809 million in revenue for the 9 months leading up to December 31st, 2024.
Wow, that's a big That's a hefty chunk of their overall revenue. It seems like this segment is really the backbone of their business, but they're not putting all their eggs in one basket, right?
Right.
They've also got that specialty chemical segment, which is where we see them making some interesting moves.
Exactly. The specialty chemicals segment is smaller, generating a lend-on $775 million in revenue during the same period. But it's where we see them tapping into some really exciting high-growth markets, like semiconductors and battery technology.
It's like they're playing the long game, setting themselves up for sustained growth in the future. But let's get back to those impressive revenue figures for a second. Their total revenue for the 9-month period reached $6,984 million. That's practically matching their revenue for the entire previous fiscal year. That's some serious momentum. But revenue is only part of the story. What about their profitability?
Well, that's where the EBITDA margin comes in. For those who may not be familiar, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a key measure of a company's operating profitability.
Okay, so it tells us how efficiently they're running their core business operations before factoring in things like debt and taxes. So what's the story with AME Organics' EBITDA margin?
Their EBITDA margin for the 9 months ending December 31st, 2024, stood at a healthy 21.1%. This is a notable increase from 17.3% during the same period last year.
So they're not just growing their revenue, they're also becoming more profitable. That's a sign of a well-managed and efficient business. It's like they're hitting the sweet spot, expanding rapidly while keeping costs under control.
Precisely. And that's something that's likely to catch the eye of investors. It's one thing to grow fast, but it's another to grow profitably. That kind of performance is what sets apart the truly successful companies.
Now let's talk about the bottom line profit after tax, or PT. This is ultimately what matters most to investors. What does the investor presentation tell us about AME Organics PT?
Their PT for the 9 months ending December 31st, 2024, reached $977 million. That's more than double what they earned in the same period last year. And even more impressive is their PT margin, which climbed to 14%, up from 11.1% last year.
That's a significant jump. It means they're converting a larger portion of their revenue into profit, which is a sign of strong financial management. It's like they're getting more bang for their buck.
Exactly. And if we look at their historical financial performance, we see a consistent upward trend in both PAT and PAT margins. This indicates that they're not just experiencing a temporary surge in profitability, it's a pattern of sustainable growth and efficiency.
That's reassuring to see. It suggests that they've got a solid foundation and are well-positioned for continued success. Now, we've talked a lot about their financial performance, but I'm curious to know more about the people behind these numbers. Who are the key players driving this success?
Well, the investor presentation highlights Naresh Patel, the executive chairman and managing director. He's been instrumental in shaping the company's vision and strategy.
What kind of leadership style does he bring to the table? Is he a hands-on leader or more of a visionary who sets the direction and lets his team execute?
Well, it's hard to say for sure without having direct insight into the company's culture, but from what we can gather from the investor presentation and other public statements, he seems to be a leader who values both innovation and execution.
That makes sense. To achieve the kind of success they've had, you need a leader who can balance those two aspects: the big picture thinking and the attention to detail.
Exactly. And it's not just about the CEO. They've also assembled a strong management team with deep expertise in the pharmaceutical and chemical industries.
That's like a well-oiled machine. Everyone knows their role and is working together to achieve common goals.
Precisely. And that's something that investors should take note of. A strong management team is a key ingredient for long-term success.
Now let's talk about their investors. Who are the people putting their money behind AME Organics?
The investor presentation provides some insights into their shareholder structure. The promoters, essentially the founding members of the company, hold a significant 36% stake. That's a good sign because it shows they have skin in the game and are aligned with the interests of other shareholders.
It's reassuring to see that the founders are still heavily invested in the company. It suggests they believe in its long-term potential. But what about external investors? Who else is betting on AME Organics?
Well, foreign institutional investors, or FIIs, hold a considerable 15.5% stake. This indicates that the global investment community sees value in AMI Organics and believes in its growth potential.
That's a strong vote of confidence. It means there's not just attracting local investors, they're also drawing attention from international players.
Exactly. And it's not just FIIs. Domestic institutional investors, or DIIs, hold a 13.7% stake, further solidifying the trust and belief of Indian investors in the company's future prospects.
It seems like they've got a good mix of investors, both domestic and international, institutional and individual. That kind of diversified investor base is usually a positive sign.
It certainly is. It suggests that the company is viewed favorably by a wide range of investors, which can help to stabilize its share price and reduce volatility.
Now let's shift gears a bit and talk about their operations. We know they've got this impressive global reach with over 500 customer locations in 55 countries. But I'm curious to know more about the inner workings of the company. How do they manage such a complex and geographically dispersed operation?
Well, the investor presentation highlights their focus on building strong relationships with their customers. They have a dedicated sales and marketing team that works closely with customers to understand their needs and provide tailored solutions.
It's not just about selling a product, it's about building partnerships and becoming a trusted advisor.
Exactly. And that approach seems to be working. They have a high customer retention rate, with many of their customers having been with them for over a decade.
That's impressive. It speaks volumes about the quality of their products and services. But with such a large customer base, they must have a robust supply chain to ensure they can meet demand.
Absolutely. They've invested heavily in building a reliable and efficient supply chain, both domestically and internationally.
What's their sourcing strategy? Do they primarily rely on domestic suppliers, or do they source materials from around the world?
The investor presentation mentions that about 71% of their raw materials are sourced domestically. This helps them to control costs and maintain a competitive edge.
That's a smart move. By sourcing locally, they can reduce transportation costs and lead times. But they're not entirely reliant on domestic suppliers, right?
Correct. They also source certain materials from international suppliers, particularly for their specialty chemicals business. This gives them access to a wider range of materials and technologies.
So they've got a balanced approach to sourcing, leveraging domestic suppliers for cost efficiency and international suppliers for specialized materials. That's a strategic way to manage their supply chain. It sounds like they've built a really robust and resilient operation. But I'm curious about their manufacturing facilities. Are they primarily concentrated in India, or do they have a more global manufacturing footprint?
Well, the bulk of their manufacturing is indeed located in India. They have 4 state-of-the-art facilities strategically positioned across the country.
What's the rationale behind keeping their manufacturing primarily in India? Is it a cost-saving measure, or are there other strategic advantages?
Well, India certainly offers competitive manufacturing costs, but it's more than just that. India has a large and skilled workforce, particularly in the chemical and pharmaceutical industries. And the government has been actively promoting the growth of these sectors through various initiatives and incentives.
So it's a combination of factors: cost, talent, and a supportive regulatory environment. It makes sense for them to leverage those advantages. But are there any potential downsides to having their manufacturing concentrated in one country?
Well, one potential risk is geopolitical instability. Any unrest or political uncertainty in India could disrupt their operations. They're also exposed to currency fluctuations between the Indian rupee and other major currencies, which can impact their profitability.
So while there are clear benefits to their India-centric manufacturing strategy, there are also inherent risks. It's a reminder that even the most successful companies need to be constantly evaluating their operations and adapting to changing circumstances.
Absolutely. And it's something that investors should be aware of when assessing the company's long-term prospects. Now, speaking of long-term prospects, one thing that really stands out to me is their commitment to research and development.
Yeah, we touched on that earlier, but I'm eager to dig a little deeper. What are some of the key areas they're focusing on in terms of R&D?
Well, they're constantly working to expand their product portfolio, both in advanced pharmaceutical intermediates and specialty chemicals. They're also exploring new synthesis routes and developing more efficient manufacturing processes.
So it's not just about developing new products. It's about constantly improving and innovating on their existing offerings. It's like they're never satisfied with the status quo.
Exactly. And that's the kind of mindset that's essential for long-term success in a rapidly evolving industry like chemicals and pharmaceuticals. They're also investing in developing more sustainable manufacturing processes, which is becoming increasingly important from both an environmental and a business perspective.
It's a great example of how sustainability can go hand in hand with innovation and profitability. Now, before we wrap up this deep dive, I want to circle back to something we discussed earlier, the potential risks and challenges they face. We talked about competition, the cyclicality of the pharmaceutical industry, their reliance on the Indian market, and the geopolitical risks associated with their manufacturing being concentrated in India. Given all of that, what are your overall thoughts on their ability to navigate these challenges and continue their impressive growth trajectory?
Well, I think it's important to remember that every company, no matter how successful, faces challenges. And Almi Organics is no exception. But what sets them apart is their proactive approach to risk management. They're not just sitting back and hoping for the best, they're actively identifying potential risks and taking steps to mitigate them.
Can you give us some specific examples of how they're mitigating these risks?
Sure. To address the competition, they're investing heavily in research and development to stay ahead of the curve and develop innovative new products. They're also expanding their global footprint to reduce their reliance on the Indian market. And to manage the risks associated with their manufacturing being concentrated in India, they're exploring options for diversifying their manufacturing base, potentially by setting up facilities in other countries.
It sounds like they're taking a multi-pronged approach, addressing each risk from multiple angles. It's a comprehensive strategy for ensuring long-term sustainability and growth.
Exactly, and I think that's a key takeaway for investors. Almi Organics is not just a high-growth company. It's a company that's thinking strategically about the future and taking steps to ensure its long-term success.
All right, so we've covered a lot of ground in this deep dive, from their impressive financial performance to their strategic initiative and their commitment to sustainability. It's clear that Almi Organics is a company on the move, and it'll be exciting to see what they accomplish in the years to come. But before we sign off, I want to leave our listeners with a thought-provoking question. Given their ambitious growth plans and their focus on cutting-edge technologies, like battery chemicals and semiconductor materials, what kind of impact do you think Almi Organics could have on the global technology landscape in the next decade? Could they become a key player in shaping the future of these industries?
That's a great question, and one that I think warrants further exploration. Their strategic move into these high-growth sectors, coupled with their strong track record of innovation, suggests that they have the potential to become a significant force in the global technology arena. It's certainly a company worth keeping an eye on.
Well, folks, that brings us to the end of our deep dive into Almi Organics. We hope you found this exploration insightful and informative. And remember, we here at The Deep Dive are always here to help you cut through the noise and get to the heart of the information that matters most. Until next time, keep exploring.